As we pull up the live ticker for TMC, the Metals Company, Inc., NASDAQ TMC, sitting right there on the board as a high beta exploration play, the screen flashes with the typical emotional turbulence that characterizes early-stage critical mineral developers. Retail trading forums are buzzing with polarized chatter, torn between visions of clean energy utopias and deep-sea environmental doomsday warnings. But beneath the daily noise of retail sentiment and standard financial media soundbites lies a profound structural reality that the market is structurally mispricing, the absolute physical bottleneck of high-grade terrestrial ore depletion versus the insatiable, non-negotiable metal requirements of the global energy transition. While mainstream analysts keep running old-school valuation models based on conventional land-based mines, complete with destructive deforestation, toxic acid tailings dams, heavy carbon footprints, and unstable geopolitical jurisdictions, they're completely missing the physics reality of the Clarion-Clipperton Zone. The planet is running out of high-grade, easily accessible nickel, copper, cobalt, and manganese. Terrestrial ore grades are declining globally, meaning miners have to shift vastly more dirt, expend exponentially more energy, and generate significantly more waste to extract a single ton of refined metal. Retail investors on apps like Robinhood or Webull look at TMC and see a speculative penny stock lottery ticket because it lacks traditional quarterly earnings or massive revenue streams. Yet institutional accumulation tells a completely different story during broader market pullbacks. Smart money is looking past the surface-level regulatory friction and recognizing that TMC is sitting on a multi-billion-ton sovereign resource base of polymetallic nodules that require zero blasting, zero digging, and produce zero solid processing waste on land. It is an entirely different paradigm of resource extraction, one where the raw materials for millions of electric vehicle batteries and grid-scale storage are literally strewn across the abyssal plain, waiting to be collected rather than blasted out of solid rock. Market dynamics and institutional positioning. When you zoom out from the intraday chart action and analyze the tape, the volume profile of TMC reveals classic early-stage institutional positioning. Every time broader macro jitters hit the speculative growth sectors or regulatory headlines create short-term panic, retail traders get routinely shaken out, capitulating at the exact bottoms. Meanwhile, patient institutional blocks quietly absorb shares, biding their time ahead of major regulatory and permitting milestones. The stock trades with high sensitivity to macro sentiment surrounding electric vehicle adoption curves, critical mineral legislation, and shifting geopolitical alignments between the West and resource-rich developing nations. Short sellers frequently target the stock during regulatory news cycles, betting that bureaucratic delays from international bodies will starve the company of momentum. However, this creates a coiled spring dynamic in the order book. Every incremental step forward in regulatory clarity, such as advancements through U.S. domestic frameworks like the Deep Sea Hard Mineral Resources Act or favorable international legal interpretations, triggers sharp short-covering rallies that catch momentum traders completely off guard. How are you playing this volatility? Are you accumulating shares during these deep-sea regulatory dips, or are you sitting on the sidelines waiting for the final commercial permits to clear before jumping in? Drop your thoughts in the comments below. Business model and historical context. To truly understand what TMC is building today, we have to strip away the outdated historical framing that haunts the deep-sea sector. Founded out of the lineage of deep green metals and its subsequent public entry via special purpose acquisition, TMC was built on a premise that sounded like science fiction a decade ago. What if we could harvest battery metals from the ocean floor with a fraction of the environmental and carbon cost of traditional mining? The core operational model relies on polymetallic nodules, potato-sized rocks resting unattached on the abyssal plain of the Pacific Ocean's Clarion-Clipperton Zone, roughly 4,000 to 6,000 meters below the surface. These nodules are exceptionally rich in 4 critical metals simultaneously: nickel, copper, cobalt, and manganese. In traditional land-based mining, a company usually mines for a single primary metal like copper or nickel and treats the others as byproducts or deals with complex sulfide ores that require massive pyrometallurgical processing plants and hazardous tailing storage. TMC's operational blueprint bypasses these legacy hurdles through strategic partnerships with heavyweights like Allseas for offshore nodule collection systems and refining hit-hitters like Korea Zinc for onshore processing. By collecting loose nodules rather than tunneling into the earth or strip mining rainforests, the company eliminates the need for blasting and massive rock crushing infrastructure. Life cycle assessments conducted by independent firms like Benchmark Mineral Intelligence have repeatedly demonstrated that producing battery-grade metals from CCZ nodules can dramatically lower carbon intensity and environmental disruption compared to Indonesian or other high-impact land-based supply chains. TMC isn't just an exploration play, it is an attempt to completely re-engineer the supply chain feedstock for the global energy storage revolution. Future outlook, catalysts, and risks. Looking out over the multi-year horizon, TMC stands at the vanguard of a massive structural shift in how industrial economies secure critical minerals. The primary multi-year catalyst centers on the finalization of commercial exploitation permits and regulatory frameworks. As regulatory pathways advance through domestic and international oversight, including streamlined compliance reviews under U.S. frameworks and ongoing developments with bodies like the International Seabed Authority, the company moves closer to realizing its first commercial-scale production targets. The financial scale of these assets is staggering, with flagship projects like NORI-D boasting multi-billion-dollar net present values, and the broader resource portfolio represents one of the largest undeveloped pools of critical battery metals on the planet. This positions TMC as a potential technological and geopolitical gatekeeper of raw material supply, especially as Western nations scramble to secure domestic and allied sources of nickel and copper, independent of adversarial supply chains. Yet prospective investors must weigh these monumental upside catalysts against very real execution and regulatory risks. Deep-sea mining remains a frontier industry facing fierce pushback from environmental NGOs, legal challenges, and complex multilateral governance hurdles. Capital expenditure cycles, partnership dependencies, and the sheer engineering challenge of maintaining continuous, high-efficiency riser systems at depths of 4 kilometers introduce operational variables that can delay timelines. Furthermore, fluctuations in global commodity prices, particularly shifts in Chinese nickel dominance or sudden oversupply waves in electric vehicle battery inputs, can directly impact project economics. Ultimately, looking past the short-term price noise and regulatory headlines requires zooming in on the immutable laws of supply and demand. The world is electrifying at a pace that legacy land-based mines simply cannot support without severe environmental and geopolitical compromise. TMC represents a high-risk, high-asymmetry bet on opening an entirely new frontier of resource extraction. For the ambitious investor willing to stomach the volatility, it is a masterclass in how tomorrow's multi-billion-dollar industries are forged in the crucible of controversy and technological disruption. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any financial decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel. Love.